Thank you very much, conference, and I think we're ready to go. I'm going to hand over to Ingrid Miley. The panel discussion today is on the future of banking on the island of Ireland. Over to you, Ingrid.
So, I'm sure you'd all agree that the 2008 crash forced a radical rethink of, if I can put it in simple terms, what banking is all about. Before the crisis hit, most people only engaged with banks on mortgages, deposit and current accounts. The more technical stuff, capital adequacy ratios and other strategic or regulatory issues, were nothing to do with Joe or Josephine Soap. I mean, you may all remember that ad before the crash with the guy on the bus. I don't know what a tracker mortgage is. Well, since 2008, even the most naive customer has realised the consequences of poor or even negligible regulation, or at the very least, negligible enforcement of the regulation that was there. 13 years on, we still have repossession cases wending their way through the courts. Thousands of jobs were lost in the economy, and as all of you here will know, the financial services sector bore its share of the burden of what was euphemistically described as downsizing. And I think it's safe to say that the guy on the bus now knows more about tracker mortgages than anyone should know in any one lifetime. But 13 years on, where does the sector stand? It still employs thousands of people on the island of Ireland. Those employees are part of a structure that's essential to keep the economy moving, from branch personnel helping customers, business and personal with current and deposit accounts, to mortgages, to the mega transactions at the peak of business and commercial activity. The government, which has had to intervene to prevent the annihilation of the system in 2008, is gradually unwinding its shareholding in the pillar banks. So, what's the problem? First, we're witnessing a reduction in competition, with KBC and Ulster leaving the Republic and AIB selling its UK operation. Second, bank employees, who you in this room represent, see branches closing as businesses move online. We've all heard about the redundancy programmes in recent years. Precarious work is a reality for many in the economy and some in this sector. And fourth, as the government withdraws, banking commentators and stakeholders wonder about the regulatory framework going forward. Now, obviously, Brexit and COVID have thrown a range of other issues into the mix, from remote working to the additional pressures on businesses arising from the economic damage of lockdowns over the last 21 months. So, with so many people involved in this sector and the economy yet again being sideswiped by COVID, a debate on the future of banking, today's debate, could not be more relevant or timely. Please allow me to introduce our panel. First, Conor Murphy, who's been a key negotiator for Sinn Féin for many years through crucial negotiations. In 1998, he was elected to the Assembly, and since 2005, he's been the MP for Newry and Armagh. From 2007 till 2011, he held the post of Minister for Regional Development, but in 2012, as part of Sinn Féin's commitment to end double jobbing, he left the Assembly to concentrate on his role as an MP. He returned to the Assembly in 2015, and since January of last year, he's held the key position of Minister of Finance. Marion Kelly joined the Irish Banking Culture Board on secondment from Bank of Ireland as Programme Director, leading its establish. Since March of last year, she's been its CEO. During her time with Bank of Ireland, she held a range of senior roles in regulatory compliance, operational risk, internal audit and recovery, and resolution planning. She's also previously worked with PwC, the European Savings Banks Group, and the European Commission, and also holds an intimidating array of qualifications, too numerous to mention here. Ed Brophy has worked as an economist, lawyer and public policy advisor in the technology, telecoms and energy industries. However, he was lured into politics and was chief of staff to Joan Burton during her time as Taoiseach. He went on to act as chief advisor to Finance Minister and President of the Eurogroup, Pascal Donoghue, and he's the founder and principal of the advisory firm Tyrconnell Strategy. And finally, I doubt that you need an introduction to your own General Secretary, John O'Connell. If you do, your union has a big problem. So to open this debate, I'm going to ask each of our participants to give a brief summary, no more than a couple of minutes, of where they see banking in 5 years' time in terms of the number of banks in the market, maybe staff numbers up or down, and maybe a key issue that they see dominating the landscape over the next 5 years. So, Minister, if I can ask you first.
Okay, well, thank you very much, Ingrid. And thank you to the FSU for the invitation to come here this morning. It is, I think, a critical juncture for banking, for business generally, but for banking in general. I think, as Ingrid has referenced, from the 2008 crash, there has been a series of changes involved in banking. Perhaps not all of the regulation that perhaps we would have expected at that stage, but certainly I know there's further work being done in it all in relation to further regulation, but control of banking and regulatory authorities unfortunately doesn't lie with us in the executive or in the Assembly in the North. It still lies with London. It's a reserved matter. But we do have that ability to engage with banks and to press them on issues. And I suppose some of the issues that have arisen and which will continue on is the increased digitalisation of banking. And on one level that's good because people have access to their accounts and access to be able to do business and off their phones and various devices 24/7. But on the other hand, as a person who represents a rural constituency, I represent South Armagh, part of Newry and Armagh in the Assembly, very much a rural constituency. And an awful lot of small rural towns or small market towns, the bank was a very central feature and a key service and remains a key service to a lot of people. As a matter of fact, our benefit system we're pushing increasingly people almost away from the post office and towards banks, and then we had with increased digitalisation then a reduction in rural banks, and I think it's I think it was the Ulster Bank is announcing, Bank of Ireland was announcing now that they're going from 28 branches, I think, over the next number of years down to 13, and quite a lot of small towns. I know in my own constituency, Crossmaglen and Katy are both losing the Bank of Ireland, which, as I say, was a centrepiece of the town over years. And I think while digitalisation, as I say, is progress on one hand, we also have to recognise that there are still broadband issues in rural areas in particular, an awful lot of older customers, and the vast bulk of our businesses here in the north, and I'm sure it's not much different in the south, are either small family-owned businesses. They're a huge proportion of our business, and the huge proportion of our farms here are small family-run farms, and they very much rely on local banking. So that will present challenges, but it also has an economic knock-on effect, I think, in small rural towns, which have been struggling, I think, and particularly the pandemic, I think, has exacerbated some of that. That when the bank closes, it is often seen to have a ripple effect in terms of small high streets and further closures of other businesses. And so we did press them very much. As I say, we don't have the authority over the banks here, but we do have the ability to engage and to engage with the FSU as well. And we supported the FSU call for a moratorium of closures for a 12-month period, and the Financial Conduct Authority called for banks to cease closing over the course of the pandemic. Of course, many of them have pressed on with that, which I think is very disappointing. But I think it is a juncture for dialogue in relation to the ongoing ripple effects from the 2008 crash and also increased digitalisation and post-pandemic, a change of work, and work as we know it is going to change in the time ahead, and how all of that impacts not only on the services that the banks provide but also the employees. And we have been in touch with NatWest in Britain on a number of occasions, again at the request of the unions here, in relation to the reduction of staff here in terms of the closure of their operations in the south. There's about 600 people here in the north, and their jobs are under threat now. They have come back to us to assure us that they're working with people to find them other areas of work. But these are all very challenging times for people. So I think that it is the right time. I know there's a banking forum being proposed in the south. We, as I say, don't have that regulatory authority here, but we are proposing a round table in the new year where we're going to invite all of the various sectors in. We're going to invite them to send us in submissions, and we're going to record that and produce a paper which we are then going to present to the financial authorities in London, so that we make sure that people who are affected by the changes in banking here have their voice heard in that regard. So that's something we're going to do in the new year, because our mandate runs out next May, and I'm very keen to get that done before I leave office and get that interaction going with the banks.
Minister, thank you very much. Marion, can I come to you? Again, a quick summary of where you see the situation and a key issue that you think is going to be in play in the next 5 years or so.
Sure, thank you, and good morning, everybody. And first of all, just to say I'm delighted to be here, and I congratulate the FSU on this topic and everything that you've done to get this front and centre in terms of the debate. And obviously, we have the Department of Finance just this week announcing the review, which I think is really welcome. So not to repeat everything that the Minister said, but clearly we're at a crossroads in banking, I would say. We have come through a very difficult period in terms of the crash, and then on the back of that, particularly in retail banking, everything in relation to the tracker mortgage issue, which has had massive trust implications for the sector. And frankly, it has had reputational impact as well on Ireland as an investment location. And I suppose what we've had as a reaction to that is very strict and necessary, frankly, regulation. But all of that, I think, needs to be reflected on now, given where we are 10 years on. I suppose from a culture board perspective, trust is really front and centre in terms of our activities. And we look at it from two dimensions, which I think are really important and need to be part of this debate. And one is trust in the sector from the perspective of the staff who work in it and feeling pride and feeling that they work in a sector that is respected and that their contribution to society is recognised. And that's a very important issue, and I think it's something that we need a balanced discourse on banking in Ireland, and I think that's an important piece for everybody involved in the sector. And secondly then is the piece around the trust of the customer in the bank to provide the services that they are providing in a cost-effective way, in an efficient way, but also in terms of financial inclusion. And it was just referenced digitalisation. And look, that's the only way forward. And I think everybody agrees that that's the way the sector is going. But notwithstanding that, the sector can't leave those who are left behind without access to financial services or access to services in a readily accessible means. And that's really important. And I think a big part of the responsibility of the financial services sector going forward is financial awareness, financial inclusion, and making sure that people really understand how to use the new digitalised services without, understanding the risks around data, etc., etc. That's really important. But also those that, for whatever reason, can't or don't want to move to digitalised services, that they're not financially excluded, and that's a challenge. But it's something that the sector and all of the staff who work in it are very well placed to contribute to. And we hear an awful lot now about ESG and what it means in terms of PLCs and corporates worldwide. But the S&G part of that is really important, as well as the environmental piece. And I think for the banking sector to really show that they want to be part of a positive functioning society, the financial inclusion piece in conjunction with digitalisation is the thing that I would like to see them focus on.
Thank you, Marion. John, I'll come back to you in a moment as you're the host. But Ed, if I could come to you. I mean, you have such a broad range of experience. You've been inside the houses of power, if you like. Your take on banking at the moment?
Yeah, thank you very much, Ingrid, and thank you very much to the FSU for having me here on the panel today. I mean, I think a few of the previous speakers have spoken about the legacy of 2008. And I really hope what has happened in 5 years' time is that we have really moved on from 2008. It's 13 years from it now. It'll be 18 years in 5 years' time. But it still overshadows, I think, all public policy discussions and all treatments of banking, whether that's remuneration, charges, competition, access, availability to services. They're all kind of overshadowed by the legacy, excuse me, of 2008. And I think it prevents us, therefore, from having a kind of a rational public policy debate on where banking needs to go next. So I'm really hoping that the 2008 kind of crisis, albeit that the left a long shadow, is kind of behind us in 5 years' time. The second thing I'm hoping is that the market is working better in 5 years' time than it's working now. I mean, if you look at the Irish banking market, there have been a number of exits, amalgamations, far fewer mortgage lenders now than there were in 2007. I think it's halved. But if you also look at the kind of performance of the Irish commercial banks, they've had zero profitability in 17 years. So like any sector that has no profits in 17 years, I mean, the only other ones I can think of are maybe newspapers and airlines, They're not kind of growth businesses. So banks need to become profitable again. That's good for banks, it's good for society, good for bank shareholders, but also good for bank workers and employees. So I think that's important. And I think in order for that to happen, regulation is going to have to change. So, like, I think the regulation that was brought in, and a couple of the previous speakers mentioned it, after 2008 was entirely appropriate given the crash we had in 2008. But I don't think it's fit for purpose anymore. And I think, the story behind some of the bank exits in the Republic in recent years is really a story of both the domestic and the EU authorities presiding over a regulatory regime with the capital rules that is really not appropriate, stops you from making a profit. And therefore, if you're owned by, say, NatWest or by a Belgian bank, you leave the market. And I really strongly believe that. And that would be the view of the Department of Finance. They've published some papers on that. They obviously haven't spoken about it in public because it's quite sensitive and they don't want to criticise the regulator, but that is the House view within large sections of the Department of Finance. So I think we do need to fix regulation within the next 5 years. And then the final thing I would say is I think ordinary bank workers are getting a raw deal. I think all of the kind of discussion about remuneration, about bonuses, about all that kind of stuff, the way it's kind of communicated by the media, by certain politicians, all proposes that it's all the fat cats. But actually, it's the ordinary workers who can't get variable pay, who can't get childcare, who can't get health insurance. I mean, what other industry is there in the country where politicians are effectively saying you can't have these kind of benefits that are part of just a normal, ordinary working set of terms and conditions? And I mean, I think we have to have a different debate on that. It's communicated often in the language of fat cats, but actually 20,000 ordinary bank workers suffer as a result of this. And I think the debate needs to be detoxified. So that's what I would hope for in 5 years' time.
That's a great word, detoxified, because I think we all remember that in the wake. I remember talking to people who worked in banks who said, you'd think I was a pimp or something because, if I go out, I get, vilified because the banks just had this overlay. John, before we move on to breaking this down into individual topics that have been raised, your take on where banking should be in 5 years' time?
So firstly, could I just take the opportunity to thank the Minister for his very clear and distinct statement and for him setting out what he committed to us that he would try to achieve, and welcome both the fact that it will be a roundtable discussion and the tight timeline that is going to deliver an output. So I just ask colleagues maybe to show their appreciation to that, because that's something we've worked towards for quite a while. So, Ingrid, just in terms of the future, we see the future as a blended future for banking with people and technology. Neither technology is bad, nor are people bad. And I think, technology has its challenges and change has its challenges, which is about people. And not all technology is good either. I had to make an appointment now with my barber, and he insists you do it through technology.
I'm not going to go there on that.
The appointment
but
is
they
longer
are.
than the haircut. So not all technology is good. So for us, I chime with what Ed was saying. The future is about people and technology. It's about better reward for the people that are in and committed to the sector. And this room is full of people committed to that sector. Our view, and we'll be publishing a paper on this in the coming weeks, is that there needs to be a real debate now, Minister, about stakeholder versus shareholder in the future of banking. What is the future? Do we want a future where the shareholder is king, or do we want a customer-centric, staff-centric, and profitable, growing bank position? Because that's what we see the future as. And as part of that future, part of the things we've been discussing today is the Financial Conduct Authority has identified key measures that would support better transparency and engagement in staff, including worker directors. And we'll be pursuing that as part of this paper. And equally, in terms of transparency and openness, around the kind of points that Ed and the other speakers were making, we believe that there should be staff representatives on remuneration boards, and remuneration boards' minutes should be published. So these are the kind of things that will restore trust back into banking that we're going to bring to the debate that's going to be held now north and south. Very welcome about the future of banking. So a link between shareholding and staff, and in terms of things like branch closures and that, there needs to be a new consideration. The exclusion piece has to come into it. I think it's really, really regrettable people didn't heed the call of the Minister and others and society and communities to pause during the pandemic. So I think while this debate is taking place, we'll be calling on banks to pause and take breath, participate in the discussion, because the impact on communities and on society of being denuded of services is huge. In one study alone, a drop of 64% in lending when branches close in a particular town. My hometown branch has closed in the recent weeks. And it's, you know, it's devastating for a town. It's fine for people who are digitally literate and able to manage in that way, but not so fine for a lot of other people that don't have that exclusion. And a key issue, again, that's been part of a public consultation up here through the Conduct Authority and in New Zealand, is about access to cash. Not everybody operates in a digital world, and access to cash is part of that. So that would be the type of future that we would envisage and that we will be debating in these forums.
Thanks, John. Well, for your audience here, I think just those 4 contributions have given us a very broad range of the kind of issues that are in place. So I'm going to try and break them down into particular topics. And perhaps one of the most controversial is the question of the pay cap for senior executives. As the Irish government gradually unwinds its shareholdings in the main pillar banks, there are calls for that pay cap for senior executives to be lifted. Now, some argue that that's essential to bring in the right talent. Others say it's an outrage without personal accountability for people receiving those high salaries. Now, the FSU carried out a poll on whether the pay cap should be lifted, and as you'll see on the slide behind you, the view of your members is pretty conclusive. Of the 1,292 people surveyed on Saturday the 13th of November, so very recently, by Pew and the AAPOR, 77% say it should be retained, 15% say it should be lifted, and 8% don't know. But, so, Marion, what's the feeling of your culture board about that question of lifting the pay cap?
To be honest, we're more focused on the flexible pay as opposed to the pay cap. I mean, the pay cap really only impacts a tiny number of people, and I don't think that's the key issue. Absolutely, if it is to be removed, it cannot in any way be removed without showing that the accountability regime, which is coming into force the end of next year, hopefully, is working effectively. So, you know, even when it's announced, we have to show that it's working effectively.
Does that mean that your view would be that you don't see the pay cap being lifted before the end of next year because it would take that long for the Sears regime to be put in place?
I think if we want to be credible about the accountability regime, we have to show that it's working before we can make any material changes. But I think the key issue really is around the flexible pay, and Ed mentioned it. I mean, that's a completely unlevel playing field between the retail banks that are subject to that restriction and their very real competitors. And if we want to attract and retain quality and high-performing staff in the sector, we have to be able to reward them on a par with their competitors. So that's a really, really important thing. I think that's where the debate should focus, as opposed to the 500,000 pay cap, which really only affects a very small number of people.
John, you know, you're representing people at the bottom, if you like, of that pyramid. Your view?
Yeah, I suppose we were disappointed when the Minister announced a review in the Republic of Ireland, when the lobbyists for the banks came out and said it's all about the pay cap. And we were disappointed with that. The future of banking has to be a much broader debate than just around pay caps. I think it's a very crude instrument, and it's there for a reason, for things that have happened in the past. And I think we need to finish that journey. So Sears needs to be in place, the accountability regime. Where we sit today, there's an accountability regime very similar to Sears in place. And it works because it holds individuals accountable and not entities. Banks don't worry that much about fines. They make provision. It takes a number of years for it to come through. They have it written off and they move on. For us, there's 3 tests in terms of the pay cap. Sears must be published and in place and in effect. They must publish the 2 reports from the Central Bank, AIB and Bank of Ireland, and get those reports. And the third one, people must be held accountable. 40,000 families, some lost their homes, some lost their lives in terms of the tracker mortgage debacle. And it happened in every bank. And there has to be a question as to how did it happen at every bank. It wasn't an individual. It was a cultural, and I know Marion works very, very hard day in and day out in terms of this issue, and we're further down the road. But those 3 tests must be met before the caps can be lifted. And when they are lifted then, I think they have to be linked to behaviours. And the very thing that Marion identified, ESG, particularly the S piece, the social piece in terms of communities and so forth. And we haven't seen much evidence of that. So that is a big feature. So links to behaviours. They're a crude instrument, and their time will come, but there's a journey to be had before we get there.
Ed, you were in government buildings when a lot of these issues were being teased out. Your view on what should happen now with the pay cap?
Yeah, I mean, I never really felt that there was any issue with removing the pay cap. I don't think we should remove the pay cap, certainly in the short term. My metric for it would simply be when all the banks have become private again. I mean, then perhaps you could lift the pay cap. But as long as they're, remain in state ownership, I don't see an argument for removing the pay cap. As Marion and John said, it only affects a tiny number of people. And I was never really persuaded by the argument that they can't attract senior talent because they can't pay them more than 500,000 euros. I mean, 500,000 euros, I think, is enough money for pretty much anyone. So I just never bought it. And the few people who've moved on have been CFOs, people like that, chief financial officers. They've just gone to other big companies, I just don't buy it. I think the problem with the pay cap is, as long as there's a discussion about removing it, it means we can't have a more rational discussion about all the other things. And the key thing is, just back to what I said, is the kind of flexible pay, the variable pay. So if we could get to some arrangement where a variable pay, flexible pay, terms and conditions, benefits could come back for kind of ordinary bank workers while retaining the pay cap, to me that would be the best landing zone. And I wouldn't really get into stuff around the accountability regime and linking it to the pay cap. I know that's what people say, but from my perspective, the pay cap is not something they should have, or the pay cap's not something that should be removed as long as there's state ownership of the banks. Because if you think about the bank pay cap, I mean, they're paid way more than any other public servant apart from hospital consultants who also have private income. So I think it's enough for someone who's essentially a quasi-public sector employee, 500,000 euros, So yeah, no, I'd have quite a strong position on that.
Minister, what's the position here in the North in relation to that whole question of remuneration of senior executives and, a regulatory framework for accountability?
Well, as I say, the regulatory framework lies in London, and we do engage with them on a regular basis to represent views from here. But unfortunately, we don't have the call in relation to that. And obviously, the debate is a very live one south of the border in relation to that. And I do get that it's a small number of people that are affected, but I imagine there are a broader number of employees affected, because if you're on a salary which the person at the top is on huge multiples of that salary, that is bound to have an impact in terms of cohesion and the sense of team in a bank, and some of the issues that Ed raised in terms of access to other services like childcare and health insurance and issues like that if someone at the top level is on that huge multiple. Plus, I think, going back to the 2008 experience, I think that it does, that level of pay to someone at the top of an organisation kind of insulates them from decisions that they're taking because they are very, very secure, obviously, and I just wonder, does it lead to some of the recklessness that we saw in relation to that? So it's just some observations in relation to that. I think that there is a social justice issue there, and particularly, as has been said, when the state is still in ownership of some of the banks, obviously private companies can do in terms of paying their own employees, can remunerate them as far as they see fit. But obviously, in terms of handling the services that banks provide, you need that kind of transparency and regulatory authority there.
Okay, well now I'm going to move on to the question of automation and AI. Many people argue that they're game changers for financial services because they simplify processes, reduce the cost base for the banks and other financial services institutions. But others will argue, as I think you mentioned in relation to rural constituencies, it's slashing job numbers, decimating communities with the removal of branches and now maybe even ATMs. So we're going to discuss where the balance lies between protecting communities who may also be losing post offices, even Garda stations, and facilitating the digitally illiterate or older people, versus the management's duty, a fiduciary duty, to the shareholder to reduce the cost base and to deliver profits. So, Ed, where do you see that balance lying?
I mean, it's very interesting. I mean, if you look at the younger generation, my kids, teenagers, they've never been inside a bank branch. You know, now they live in a city and they have their Revolut. You know, and you know that's not because I haven't encouraged them to do that. I said you should get a bank account, but they just think it's easier and simpler, and they just have no interest. So I sometimes think physical bank branches are almost something that the younger generation just doesn't get at all. At the same time, and they're the future customers, obviously. At the same time, if you look at a lot of digital companies, they're also now starting to build a physical presence. So if you look at Amazon, for example, opening supermarkets in the States and in the UK, physical stores, mixing that with the digital kind of offer that they have, and having a kind of a blend that I think, as John said, offer between digital and physical. And I think that's probably the future. I think it'll probably mean there will be less branches, but I don't think branches will ever go entirely. But in order, I think, to kind of pull the younger generation in, then they need to have a different kind of offering within the branch, whatever that might be. It's not my area of expertise, but I think they'd have to be more attractive places and feel a little bit less maybe officious and rigid and that kind of thing. So I think it's acknowledging that the younger generation particularly are digital first and will always kind of head towards the digital offering, making the kind of branches more attractive to them and trying to then have the consumer channel or the customer channel that is kind of a blended channel between very easy digital access on your mobile or whatever, but also the branch that's a more attractive place to go to for more complex needs like mortgages or whatever it is. So I think it's blended, the mix between physical and digital, but probably less physical than we have been experienced in the past.
Is it that we're in a transitional space where eventually everybody will have been a digital native, but it's that there's a cohort who just never got the training,
sure,
and that they're the tail out, if you like, and I don't mean that disparagingly of anyone.
Yeah.
Would that be the case for those rural communities that you're talking about, Minister?
There's undoubtedly an age element to that, and people's familiarity and capability with digital. But you know, the local bank in a small market town is a significant footfall generator. Because people come in to do their banking. Most of our businesses generally, but certainly most of the businesses in those areas, be they, you know, shops or other types of business, or family farms, they're all small businesses where people do need that regular access to financial services and transactions, and they generate, as I say, a significant footfall, which has a knock-on benefit within the small town. So the removal of them is always seen as kind of the start of the end of a small local high street, and it's very, very challenging. And I say I have had the experience in my own constituency of two small market towns losing the Bank of Ireland branch, even though we had implored with them not to move, certainly during the pandemic, in relation to that. So I think I get it, there's a balance, of course. And younger people are more familiar with digital, but there are businesses that need that access, I think, to those services, and I think that there should be a recognition. If it's not the same buildings, because you traditionally find that banks in small towns are in fine big buildings that they have been there 100 years. I mean, if it's a different type of service in an office, you know, a smaller building, but that face-to-face service is very important to rural communities.
But are governments impotent in this? I mean, like, as a government, I'm sure as a minister yourself, you care about your community and you want it to be effective and you want your citizens to have the best services they can have. But what can you do when a financial institution decides, right, we're upping sticks and we're no longer going to have a branch in Banagher or wherever, you know? What can you actually do?
Well, I mean, the financial institutions, okay, we don't have the regulatory authority with them, but we work with them. They're part of the business offering here right across the north, and we work very closely with business. So I think we can remind them of the duties they have to communities as well. So it's not just on the profit margins. They have a duty to communities. But we do actually, because ATMs are considered property in terms of property tax, and the only revenue source that we really have are rates on properties. We give rate relief to ATMs in rural areas so that the people don't have to pay. So there are certain incentives we can get to try and keep that access to cash, and we do provide rate relief on rural ATMs, not in the towns, but not in the larger towns, in rural ATMs, to try and keep some sense of service and to support the banks and other financial institutions in continuing to provide those services.
Marion, for your, for the banks that you would be engaging with via your organisation, How are they balancing that duty to the shareholder versus the duty to a community? Or is it a duty to the community, or is it just coincidental that you are in a community?
No, there absolutely is a duty to the community, and if you look at any of the purpose statements or value statements of any of the 5-member banks, for example, of the Culture Board, you'll see reference to customer centricity, you'll see references to being a good corporate citizen. They'll have very nice detailed reports about their commitment to CSR and ESG and everything else. And I think the issue is, absolutely, somebody mentioned it, the banks have to be profitable. They're not charities, they have to be profitable, they have to make money, but the stakeholder or the shareholder is not king, I think, which John said. You need a balanced approach, and if you want to be credible as a bank, or indeed any corporate, you have to show that it's not just words, it's actions. So you can have these nice, fine purpose statements and value statements, but you need to put them into practice and show how you are supporting communities. And I agree, look, the future is blended. Absolutely, digitalisation is the way forward, but you can't forget about those who are left behind. And there will be a certain cohort of people who, maybe it's just a timing thing, as you mentioned, Ingrid, who needs support for a particular period. But there are others who will need supports on an ongoing basis. So there's people through whatever circumstance happens in their life, they may become financially excluded or financially vulnerable, and they will need support, and they will need human interaction and human support. And maybe that is at the end of the phone. It doesn't necessarily have to be in a branch, but they will need that. And I think we can't lose sight either of the major life milestones around getting a mortgage, investing in a pension, etc. And the benefit of human advice and interaction and querying is really, really important. And I think trying to set that up in a way that will work financially for the institution, but will also provide the service and accessibility to customers is the challenge. But it's not insurmountable. And I think that if you look, for example, even at the analysts who are looking at banks, they're increasingly reporting on things around social capital metrics. So banks need to put their money where their mouth is. It's not just all nice, fine purpose statements. You need to show how you're doing it in practice and how you're supporting your customers. And I actually think that will be a differentiator going forward of how well you do that.
John, you're representing members here, and some of them are seeing maybe losing jobs because of AI, and yet, as Ed says, in order to remain employed, the banks are ultimately going to have to be profitable. Where's the balance for you?
I think the balance lies in when we're moving to technology, we're moving at a pace. I think the responsibility is with the employer to support people in that transition, and it's often referred to as a just transition. So, there's going to be a future in the finance sector for analysts, IT experts, and so forth. And there's people who want to remain in the industry and in the sector, and they should be supported in doing so. I think AI in particular has, a number of challenges, bias being the biggest one. We've seen examples of companies like Amazon and others who have built algorithms and so forth to discover that there's inbuilt bias into them. So, and what we can't have out of AI is a Facebook situation. And what I mean by that is that it becomes too big to even regulate, that it's in control, and therefore for us, the regulatory and the political system needs to grasp the nettle. There has to be human intervention, and it's it can be banking, it can be recruitment, and in terms of understanding it and the impact of it. Even this morning we were discussing AI, and we talked about things like Netflix and the impact that can have, and in terms of the algorithms and so forth, the information that's gleaned in relation to that, and the impacts it can have. Apparently Boris Johnson's Netflix account has a lot of Peppa Pig on it in its algorithm. And so,
well, given the benefit of the doubt, it could be for Wilfred. Okay, well, I'm going to move on now on that very, very deep political point. On to the point of regulation. John, you've just mentioned, the importance of algorithms and tech and AI and automation not being too big to regulate. Ed, you were, as I said, in the Department of Finance. Where do you see, do we have enough regulation? Do we need more regulation? Do we need to enforce the regulation we have? What went wrong with regulation? What is wrong with regulation?
I mean, what went wrong with regulation, I suppose, has been written about, and there have been many reports about it. But it's probably what's the story of regulation now that is more relevant. And my view is that it's not really fit for purpose. It's very much based on what happened in the past and not what the future is going to look like. So if you look at the Irish banks, they have uniquely strenuous capital rules that they're under. Completely different to any other Eurozone banks. Completely different, actually, to banks in Greece and Spain, which also went through massive property-led financial crashes. So the regulation is kind of not appropriate. And, definitely it is a reason, not the only reason, but it's a reason behind the exits. Because if banks have to hold so much capital, they can't lend, they are less profitable. It's a kind of the opposite of a virtuous circle, whatever that is, So it is an issue. Another issue with regulation, I think, and I think it links to this issue of technology, is I think the fintechs are kind of getting away with murder, really, when it comes to regulation. Because essentially what they're doing is kind of, I mean, some of them are better than others, but essentially what they're doing is kind of doing what Napster did with the music industry. They're kind of riding on top of the regulatory infrastructure that all the kind of licensed banks and all the kind of licensed players have to adhere to. And they're kind of skimming off the cream at the top, like my kids with their Revolut cards. But they're not doing anything else, So I think there will have to be a new settlement at some stage which says fintechs are now in banking, they are no different in a sense from traditional banks, they therefore need to be regulated in the same way, or in a similar way to traditional banks. I think in the same way traditional banks, particularly in Ireland, need to have a different regulatory settlement around capital rules. And I think that might be where we might get a new settlement in terms of regulation. But certainly at present it's not working for the traditional banks because they're kind of over-regulated, and the fintechs are under-regulated. So,
Marion, what's the solution to this difficulty with regulation?
Well, I won't go back over the capital issue that Ed has just mentioned. I would agree with that. I do think we need to take a stand back, and obviously part of this review that will be getting underway now in the Republic is important that the regulator is part of that as well. It's very important that the central bank is part of it and is looking at its role in terms of the future of the sector. And I think absolutely we need to have a level playing field. So you have banks that are subject to very, very stringent regulation. A lot of the time it hasn't worked very well, but it is there and it's a huge cost overhead. And then you have others, like Ed mentioned, from the fintech side of things, who are cherry picking and are not subject to the same compliance obligations, and they have a cost advantage for that, and I think that's something that really needs to be looked at. In terms of how efficient regulation is and isn't, if I just look at the sort of the culture and conduct area, which is what we look at particularly in the Culture Board, I think we need to distinguish conduct and culture. I think the central bank, for example, has very detailed conduct of business rules, and I'm sure everybody in this room has come across them in their day-to-day work within the banks. And I think that's something that the central bank absolutely needs to keep a focus on, make sure it's fit for purpose, and enforce against it and make sure there's accountability, and we already touched on the SEER regime in that context. I think culture and behaviour is different. I don't think, frankly, that you can regulate that. I think it's something that an institution needs to do itself. I think it can be encouraged, it can be called out where behaviour is inappropriate, and you can have sanctions on the back of an accountability regime. But if an institution doesn't take culture and behaviour seriously and see it as part of its brand and its purpose, you can have all the regulation in the world and it won't make any difference. So I do think we need to look at them too slightly differently, and look at the need for institutions to recognise that this is something that they should be doing for their own business, and it needs to be led from the board down in terms of culture being part of the business strategy. Regulation will help you do your business in compliance with the certain rules and regulations, which need to change and evolve over time. They can't be there forever and a day, but culture is slightly different.
Minister, in the north, to what extent, I mean, we saw the implosion that we had in the south. What was the situation up here, and where do the authorities here stand on regulation?
Well, they have been taking some measures in London, and there is an ongoing review in terms of access to cash going on at the moment. We feed into that in as much as we can engage with banks here, and we can engage with the unions and customer organisations and others, and feed into that. I think it's almost a facing two ways. It has to take account of what happened in 2008, because that's the basis for where, when things go wrong, the impact that they had. And it had a huge economic impact on this side of the border and in Britain as well as it had in the south. Perhaps not just to the same level of crisis, but it had a significant impact. And we all felt that ripple from that banking crisis, which was global, essentially. So I think it has to look to make sure, because of the sheer impact badly regulated or unregulated practice can have on the broader economic fortunes, then it has to look to make sure that can't happen again. But it also, I think, does need to look to the future, because, as we've been discussing here for almost the last hour, things are changing very rapidly, and we need to try and be as ahead of the game as we can. And I get the point in relation to fintech and other organisations that are now coming in to this area, and they need to have the same level of transparency and accountability. If we're expecting that from the mainstream institutions, then we should be expecting that from everyone who's involved in that kind of banking and financial sector, because, as I say, the consequences of it going badly wrong are so significant for economies. Then I think that it needs to be something which is taken very, very seriously. So I'd say to my open remarks, I'm not sure that enough has been done since 2008. I still don't believe enough has been done. I do think we need to base those lessons in that experience, but we do need to look forward into how things are changing and to make the banking system work efficiently and effectively, but responsibly as well, to its customers and to its employees.
John, the Financial Services Union was at the coalface of 2008, the run-up to it, the shock, the aftermath. What do you, from that position, and you as General Secretary, what would be your view on how regulation worked, failed, or should be changed?
I think probably the failure of regulation is self-evident in what occurred and what we as a society are left with as, a debt going forward for not just our generation, but the next generation. And I think in terms of, there's plenty of reports that have been carried out on what went wrong. I think the concern for us, and what we debated here this weekend, is the concern that it feels like we're just going to reset the clock and restore pay, restore bonus payments and so forth, and not make any other changes significant enough in terms of going forward. So the old adage of, if you do the same thing and what you'll get the same results. So that is a concern for us. I think the consolidation of the sector that has taken place, not just in Ireland, in Europe and beyond, requires regulators to rethink and reset how they regulate, right? So it can't be the same. If you take the Republic of Ireland, 12 or 10 retail banks, now we'll have 3. You can't have the same regulatory regime. Competition isn't as clear and so forth. And you have to regulate in a different way. That doesn't need to be punitive. That can be encouraging, managing behaviours, but customer-centric, I think, is the key. To tell you how the reset needs to occur, the Consumer Code in the Republic of Ireland is dated 2012. It's out of date, predates the neobanks, the Revoluts, and so forth, and isn't fit for purpose. Customers are at the centre of the purpose and values of the Central Bank of Ireland. If you click on their website, customers are central to what we do. But when you look and peel that back, the regulator had not met his Consumer Director of Affairs for 9 months. One bank closed 40%, almost 40% of its network, and the governor admitted that he hadn't met with them. Didn't see a need to meet with them. So that's not a customer-centric approach in terms of... And I think we have to learn for other sectors in terms of how regulation is done. Saw an article the other day in the paper where one of the telecom companies were fined because they didn't acknowledge a customer complaint within 2 days and they hadn't responded fully within, I think it was 5 days, and they were fined. Right? So that's the punitive side of it. But the regulator needs to I think, manage that balance of encouragement, driving the cultural changes that we're working through in terms of the Culture Board, with a punitive side, and Sears are part of that. So for us, the evidence today, take a straw poll of our colleagues. If you're on a branch in any of the branches now, you look out all day at a queue. I passed Rathfarnham branch the other day, 18 people queuing outside the door, right? Put yourself in the position of the person in that counter. all day, every day, right? Deliberate strategy by the banks, the regulator looking on, to drive customers into digital forums by giving them a bad service. So you'll go on the phone, except that you'll wait for an hour. We've colleagues here working call centres. You'll wait for an hour. Imagine talking to that customer every day and how frustrated they will be when you get to answer the call. And the latest one to appear is the transfer of accounts. We have 2 banks, one indicating that it is going and one confirming that it's going. And people are getting appointments in April and May of next year to say, we'll see you then to open your bank account. So the regulator needs to up their game. They need to reflect and reset in terms of a customer-centric approach.
Okay, well, we've got about 10 minutes left, and my final question relates to trust, because like when I was growing up, people trusted that your bank had your interests at heart. Yeah, they were going to make a few bob off you, but for example, when I bought my first house, I got 2.5 times my salary, and nobody was going to let me have more than that. And yet, in the run-up to the crash, we saw multiples of salary. People were lending. It was a lot of it commission-based and what have you. So that shattered trust. Tracker mortgage scandal, many other things. What should be the priority now for the banks to rebuild trust? Minister, you're dealing with them here. What do you think should be the priority to rebuild trust? Or can it be rebuilt?
Well, I think it will take some challenge, and I think some of the issues that John outlined, just about actually access to your service, that there's a strong element of trust is built there, and that's why the local branches are so important. You know the people who work in them, you know the bank manager. You're familiar with those people, and that if the banks have been outlining in terms of the culture that needs to become more evident, not just on paper. If the banks want that customer-centred culture, then they need to recognise that they need to rebuild the trust themselves, and that means that they need a better service, a better engagement, and they need to make sure they have people resourced in the bank branches that can do that work for them. Because I do think there still is that level of distrust, and we're facing into, I'm sure, an economic downturn ripple from the COVID pandemic, which is going to exacerbate some of the difficulties people were already in. So I do think there's a sense, the 2008 experience gave a sense that the banks were out here, the financial services were out here doing their own thing for huge amounts of profit, taking very reckless decisions which impacted on the livelihoods and the homes of so many thousands and thousands of people. That's a huge gulf that needs to be bridged now again, and I think we need to have a sense that we are all now facing into, hopefully coming out the other side of this pandemic, an opportunity for rebuilding, huge advantages in technology, huge changes in work practices. The banks need to be seen to be with us in doing this, not seen to be outside it, looking after their own shareholders, but they need to be seen to be working with the rest of us and trying to improve things, build better services, recognise that people need support, recognise that employees need support from their bosses in the banks as well, and work with us in that regard. And there is an opportunity when we all have it, in the period ahead, we will all be required to pull together to try and get things over the pandemic hurdle and into a better system of operating, and the banks can step up and play their part in that.
One quick question, yes or no. As we sit here today, do you trust the banks?
That's a difficult question. I have engaged with them. I think if we get away from the system, I know you want to yes, no, if we get away from the system where people can operate in a fast and loose fashion with hugely inflated wages, then we take away that sense of, I think, perhaps a more individual and personalised approach to the job they do, and get a more corporate sense of what they do and a customer-focused sense of what they do, then I think they can rebuild the trust. Because I know that my own bank manager, he's a really good guy. I would absolutely trust him, but the service itself, I think, needs to re-engage with the people that it services.
Marion, do you think that banks are trusted? And if not, what do they need to do?
Well, we spend a lot of time talking about this, John, at our board meetings. And we actually do a lot of surveys about whether banks are trusted or not. And, the data shows they're not, frankly, so it's no surprise to anybody. And the trust levels in Irish banks are actually quite a lot lower than other jurisdictions. I think only Spain was lower than us in our last survey. So what do you do about it? And, we spend a lot of time talking to people about this, and it's really about outcomes. So staff want to see better outcomes for them, and customer want to see better outcomes for them. And it's only through those outcomes, not words, that trust will eventually be restored. And to be honest, there's probably some cohorts that they're never going to trust the banks again, and we have to accept that and still continue to support them. And when we look at it, we look at a number of different ways that banks can rebuild trust. And it's around ability, so actually providing a service that people want in a timely and an efficient and cost-effective way. It's around doing it with that it's dependable, but you're doing it with integrity and purpose. And I think the integrity and purpose piece is the more nebulous, the more difficult piece to crack. And it's everything that we've just all been speaking about. It's supporting those who may, for whatever reason, be left behind or feel less comfortable with the move to digital through financial awareness, financial training, making sure that we're focusing on the vulnerable in society and offering services to them, and showing that it's meant in terms of the being a good corporate citizen and playing a role in society. And in terms of staff, it's really important that they are empowered, that they feel that they have a voice internally. For example, when people have concerns, that those concerns are listened to, so speaking up and listening up as people talk about it. All of those things take time. It's going to be a long journey, but I do believe that we can rebuild trust in the sector, but it needs to be a consistent and ongoing effort by everybody to get there. And I think we're making some progress, but it's going to take time.
Ed, you're slightly on the outside in that you're not part of the, as John and Marion are. Your view as an outsider, having been on the inside as well, are banks trusted, and if not, why not?
They're not, no, and the reason is history, is because what happened in 2008 and everything that happened after that. So banks are very much linked in people's minds with a very painful, period in Irish history that's still very live and still, as people have mentioned, with kind of people slipping in debt and still having mortgage issues, it's still very real for a lot of people. So, of course they're not trusted, and it's interesting that they're also not trusted in Spain because it went through a very similar process. I think it's going to be very difficult, to be honest with you. I think there probably is a generation that will never trust the banks again. And then there's the kind of coming generation that, to a certain extent, won't be using the banks as much. So I think it's quite existential for the banks, this issue of trust. I think they have to establish it. A few suggestions I think that might be worthwhile. First of all, I think they just need to stop talking about remuneration. It's tin-eared. It just sounds off. People will never get their heads around the guys who essentially bankrupted the country now want us to pay them loads more money, and we still own them. It's just not an equation, that will ever kind of compute with the average punter, and if you did a poll on it, as you did, you see what the answer is. So I think they just need to start talking about that. They won't start talking about that because they, to a certain extent, can't really help themselves, and they really believe their remuneration is a challenge, and, that's kind of the world they live in. So if they stop talking about remuneration, I think they'd be trusted more. I think they also need to maybe tell a better story of what they are now. They're not Anglo-Irish Bank, they're not kind of Buccaneers, they're kind of monoline. They're smaller, nationally focused, guys who give out mortgages and have current accounts and things like that. They're very kind of vanilla businesses now. They're not kind of exotic, people on the financial frontier. So they're doing a very workman-like, vanilla kind of service. So they should just maybe talk about that a little bit more, because I think people still think it's all high finance and, all the kind of fancy stuff that maybe blew up the financial system in 2008. So I think they probably need to do that a little bit more. And I just think there needs to be a bit more humility in general. Humility, I think, is very much in order. And I see some signs of that. I think the way they dealt with the payment breaks last year when we hit the pandemic was actually very good. There was no questions asked. There was no strings attached. It was just, we need to do this. It's a pandemic. And there were no difficulties. That was certainly the experience of myself and the minister at the time. A little bit more humility like that, I think would go a long way towards restoring trust. But I think overall it'd be very difficult.
John, you're going to be wrapping this up, but on this question of trust, your members were at the coalface. Your members were the ones having to tell someone that their mortgage was in arrears and deal with that. How have your members been caught in the crossfire on that question of trust?
I think they've been placed sometimes in very difficult situations. I will just give one example in terms of the recent announcement by Ulster Bank to leave the market, which is, commercial decision made by their board. We campaigned against it. But our members for 6 months were in the situation of customers coming in And our members were given a script to say to the customers when they came in. And it was along the lines of no decision being made, work away, and neither the customer believed it nor the person reading out the message, but they were instructed and had to read out the message. So that placed them, that's just an example of our members on the coalface having to deal with it. But I think we do have to be optimistic, and I do think Ed is right. You have to acknowledge what the banks did around COVID in terms of a societal move, right? And I think how it came about, how quickly it came about, and that reassurance. For us as members, we were having conversations with the bank about pay certainty, right? There's other sectors, the aviation sector and so forth, still aren't out of pay certainty. And in credit to the banks, right, there was some initial wobbles. We were in with some banks and they were saying, we'll pay for a week and then we'll see. Nobody knows where this is going, right? But that was resolved. So I have to acknowledge, and you have to be optimistic in terms of it. And I think they have an opportunity when the government eventually decides what they're doing around the MICA issue to again show support to communities and individuals and so forth. Not their responsibility, but societal, taking that broader view. But that's an opportunity for them. But I think that a lot of what needs to be done is around the change and how change is done, and the Culture Board is again leading out and setting out principles of change and how change should come about for communities and for staff. I think if you want a reality check, read the central bank reports, right? They tell you the scale of the journey we've yet to take, where those reports are very, very current, and some behaviours were continuing even after they were identified that this is wrong, this is illegal and so forth. So I think we have a journey, but we must be optimistic in terms of it. For us, we also saw it in terms of trust, where we made those calls around the pandemic. We got a lot of political support, we got a lot of community support in terms of, look, we're not saying not to close branches, we're not against change, we're probably the most progressive trade union in the country. We've embraced technology before people, with ATMs and so forth, way back in the day. One bank proceeded with its redundancy program and one bank paused. Now that, to me, is the optimistic thing, is that we got 50% of the banks to listen to us around the issue. And those are the kind of things that will start to rebuild trust. But it's about taking that wider societal stakeholder versus shareholder, I think, is going to be a really interesting debate as we get into these discussions.
Well, ladies and gentlemen, I think we'll all agree that that was a fascinating discussion. I have to say, when John asked me to do this, I did a bit of reading around, and it was very revelatory just exactly how many issues this key sector in the economy is facing going forward. But I have so many other questions, but we have run out of time. I'd like to thank our 4 panellists for taking the time to participate in today's debate. I know it's time for lunch now, but I'm sure a lot of what you've heard will be food for thought rather than food for eating. Thank you again for inviting me to take part. And could I ask you to show your appreciation for our panellists, Conor Murphy, Marion Kelly, John O'Connell and Ed Brophy. Thank you very much indeed.